Well, one of the big stories this afternoon, Senator Chuck Schumer saying the SEC will ban so-called flash trading. That's a technique that allows some brokerages to see market data a split second ahead of everyone else. Joe Saluzzi, co-head of equity trading at Themis Trading, joining us now over the phone for more on how the SEC plans to ban flash trades. Joe, good to have you back on Bloomberg. Good afternoon.
Thanks, Carol. How are you?
I'm doing well. I'm assuming you like this talk of a ban here.
We do. We applaud them. It's good that they're listening to the public's concerns about the issues. Obviously, flash trading is one of the issues regarding high-frequency trading. It's not the only issue, so we hope that they're not getting sidetracked by just this one issue. The others, like we've talked about in the past, like co-location and liquidity rebate fees, still need to be addressed, though.
All right, you've thrown a lot of things at us. Somebody at home may not know what the heck you're talking about. Why is this all so bad in your view? Why does it make maybe the playing field not level here?
Flash trading, it gives an advantage to one investor class over another, and that investor class is the one who has the fastest computers, who happen to maybe co-locate them as well at the exchange's data center. So it's basically allowing them to see an order before it gets to the regular exchange. And it doesn't necessarily mean that it's going to be traded by the high-frequency trader. Mm-hmm. More likely, it's going to be canceled. So an offering that may be out there may cancel once the high-frequency trader sees a flash order coming. So it's easy. I compare it to the dealer at a card table seeing all the cards and, basically knowing whose hands are who. So this is a good thing that they're going to do away with this. We encourage more of it.
All right. But, if the players get to see it, if enough players get to see it, why is it so unfair?
Because not every player, it's only a subset of investors. They're estimating that only 2% of the actual traders are high-frequency traders, mm-hmm. Yet they command 70% of the volume. They command a lot of attention at these exchanges, so they basically tell the exchanges what they want, and the exchanges give in to them. And as evidenced by NASDAQ's recent comment saying that the only reason why we had a flash order was because we had to compete with another ECN who already had it. I mean,
right.
That's kind of crazy because we're looking to the exchanges to be, where the fair markets are. We don't want them to compete with each other against their own interests.
There are rebates and charging of fees in connection with this, correct? So these guys are making money, the exchanges.
The co-location fees are huge, and I haven't dug into the exact numbers in their annuals, but they're making millions. And obviously, the New York Stock Exchange is building 2 new data centers at a cost of $500 million total. So that tells you they must be making money off of this. Otherwise, they wouldn't be building out those big, just like a casino in Vegas has a billion-dollar hotel. Well, someone's paying for that.
Right. Hey, Joe, there's an awful lot written out there on the Internet and blogs about this, and they talk about you specifically because you've been pretty vocal about how you don't like this high-frequency trading and so on. And they say specifically that you're not going to like it because you're an execution trader. I'm reading something that's specifically written that algorithms and high-frequency traders make your life very difficult because no human can do the job as well as an algorithm can. I mean, that's fair.
That's the biggest joke. I challenge them any day. I will beat them. My clients know that we execute their orders much better than these algorithms. Algorithms are sheep. They just follow each other along throughout the day.
But it makes your life more difficult, doesn't it?
No, it doesn't. Actually, it makes I enjoy fighting the machines, to be honest. Look, we're not anti-technology. Look at my desk right now. I've got computers everywhere. Okay, we are pro-technology. We are pro-free markets. We are against, however, when one class has an advantage over another,
right,
and they can out-trade you because they're seeing things beforehand. That's the difference here. I'll compete with them mano a mano any day. I dare them.
Hey, Joe, 30 seconds left here. I mean, is there some way, do we have to have an ultimate ban on flash trading, or is there some way to let it,
yes,
longer exposure, or what?
No, we need to ban it because we can't trust the exchanges. If left to their own, they'll put this thing back out there again. We also need to look at what else is going on here because obviously the exchanges are putting these things out and they know they were wrong. So again, like I talked about before, co-location, and we want to question this whole idea of rebates. Why do people get rebates for adding liquidity?
Hey,
it's just an incentive.
All right, 10 seconds here. A lot of people making money on this, though, and there are a lot of lobbyists out there going in the other direction. You really think we're going to see changes here? I do, because the public's demanding it. That's what it's about. It's not about my firm or anybody here. It's the public. All right. Good to get some time, as always, Joe. You take care. Thanks, Carol. Joe Saluzzi of Themis Trading.